Here at Abroaden, we're super passionate about the show Industry from HBO because it talks about things that we're really all about: finance, living abroad, and this season, fintech. It's pretty much our wheelhouse. To help you get the most out of it, we're breaking down the key financial terms from each episode as they drop. Season 4, Episode 1 just came out last night here in Europe, and here's what you need to know to get the most out of this series. Short selling. So Harper's goal in her fund is to make money by being a short seller. Short selling is where you think a company is going to do poorly over time. And how you make money on this is you go out and borrow the shares of this company from a lender and immediately sell them on the market at the price that they're trading at that moment. Then, over time, you're hoping that the share price will continue to go down. And at a certain point, you're going to go out and rebuy the shares on the market, return them to the lender, and make a profit on the difference between what you sold them at, and what you borrowed, and what you bought them at and returned them in at the process. Harper's fund is all about short selling securities against companies that they think are doing poorly. Speaking of that, at one point, Harper decides that she's going to gate her fund after an investor threatens to pull out. Some investment funds have the right to gate their investors, meaning that they can block them from taking out money. Usually they do this when the investments that they're investing in are illiquid, and it'll be very difficult for the fund manager to recuperate all the cash. In some cases, like in this episode, Harper believes that she's not been given enough time to be able to execute her short position strategy effectively. That's why she put the gate in place. Last, let's just talk a little bit about Tinder, the fintech in the episode, and what they're doing currently. As the episode starts, Tinder's introduced to us as an alternative payments provider. And effectively what they're doing is they found a niche in the payment space where they're providing payment services to questionable or at least less than above board companies, such as an OnlyFans-like competitor. Effectively, alternative payment companies help higher risk companies get access to payments so that customers can pay them and they can pay their provider. In this episode, there's a whole lot of talk about them pivoting away from it. I don't want to give a spoiler away, but when they're talking about alternative payments, they're trying to target a niche where companies like PayPal, other Stripe, other companies that provide payments don't want to touch it for compliance purposes. That's it for Season 4, Episode 1. We'll be back next week breaking down the key terms. If you want to learn more, or if you're binge watching the series to get caught up, we have our full, complete, unofficial guide to financial terms in industry. You can get that in the link in bio. Otherwise, give us a follow. Don't miss out, and I will see you at the next one.